What is up, everyone? Proof of Workforce Live. Maulers talking about macro markets taking a mauling. That's a tongue twister there. Dallas Morning News says Texas doesn't need a Bitcoin reserve. Senator Marsha Blackburn out of Nashville intros bill to ban federal labor unions, and Musk ruffles a few Italian union feathers. Punch your time cards. I'm Don Bay. Chris Alemo is about to come through. And this is where workers and wage earners come to grab Bitcoin signal. Alemo, who was 10 minutes away from me the other night, but did not call. And so how are you, man?
I'm doing well. I'm seeing you later in the week, so we're going to make amends. Break bread.
Yeah. We'll air this out at a different time. Let's go right to Maulers right now on macro on what's happening from the closet of Maulers.
So my opinion has always been the same. And if you're a longtime listener of the show, you've done really well. We've been right on the ball. But now we're starting to get validation from the literal Treasury of the Secretary, which is he's saying, I know the economy is going to roll. I know we're going through a detox period. I'm literally rotating liquidity from the public sector to the private sector because we need growth and we need real value, real investment, real productivity. That's not going to come from the public sector. Of 1/4 of our economic progress can't be from the United States government. They're not doing anything. They're not doing anything. With all that rant, we now are starting to see a weaker dollar. The dollar's gone straight down. Bitcoin has held this $80,000 mark. All eyes are on the S&P 500 because the government needs the S&P 500 to survive. It is the primary savings account for the American. It is the primary vehicle in which they collect tax receipts, right? Capital gains. People feel rich. They spend their wealth. They buy a house. They buy stuff. They pay capital gains. That's an income stream for the government to cover its expenses. So I do think April, May will start to turn up. Now, last few thoughts on this rant.
Okay, so he mentions the S&P 500 with the Alemo is down 8% on the month, so some short-term pain there. And interesting takes from Maulers on his last podcast, but lays out his case where he mentioned before that there'd be some short-term pain with the new administration, rotating liquidity, kind of fulfilling the vision that they have for the United States and how money's going to move. Obviously, we're feeling that pain right now. And as he mentioned, not just in Bitcoin, across markets, including traditional markets and all types. Thoughts, Alemo?
Yeah, I mean, I think it's basically Powell versus Trump. And what I mean by that is Jerome Powell, chairman of the Federal Reserve, and Trump, obviously sitting U.S. president, the 47th president of the United States. Before Trump got into office, when he was on the campaign trail, he was mocking Jerome Powell, saying he knows more about interest rates. Jerome Powell was punching back, saying, I was put in this position by Trump. I'm going to stay and I'm going to serve out my term. So basically, these two titans of industry, so to speak, butting heads. Trump saying he knows interest rates better. Jerome Powell says, no, we need to keep interest rates higher for longer in order to stop inflation. So basically, these two people are warring with each other. And basically, Jerome Powell said to Trump in layman's terms, or I'm simplifying this, that I'm not going to drop interest rates just because you want the economy to rip roar. So, but Trump, Bissett, Howard Lutnick, the Treasury Secretary, the Commerce Secretary are all saying they need interest rates to come down because the United States government has to service $10 trillion of U.S. debt over 2025, and specifically $2 trillion needs to roll over in April. So if Trump's like, fine, Jerome Powell, you don't want to play ball, we're going to tank the economy. Elon Musk, my boy, go do whatever you need to do. Start cracking heads, start cutting departments, trying to get rid of money. That is disinflationary because liquidity is being withdrawn from the economy because he's cutting budget. He's cutting things that they're spending on. So Trump is hoping, and his team, that the economy will take a turn down, exactly like Maller said, in the short term, because they want the bond market to break. So that way Powell needs to, he's caught between a rock and a hard place. He's like, okay, maybe we need a little bit more inflation. Not that I'm happy about that, but if the bond market's breaking and we need to do QE and provide liquidity for the markets, that can bring lower interest rates down. the U.S. government can service debt at a lower interest rate, so it helps reduce the federal deficit of the budget, which would make Trump and his team very happy, while pumping liquidity into the markets in order to make things to go again. So I hope that's like a layman's term breakdown, but basically I hope that makes sense with where we're heading. Trump basically wants interest rates lower. He needs interest rates to be lower to balance the budget, and Powell doesn't want to play ball because he sees inflation is still above the 2% target. I know now they're claiming the 3% target. It's down, but he doesn't want inflation to go rapid again. It would really hurt workers and everyday people, where Trump thinks he knows better by basically reducing the deficits and then eventually could lower taxes. I know him and Howard Lutnick have been talking about reducing tax to zero for any single person or couple that makes less than $150,000, which would be a huge tax break for a lot of people. This is literally thousands of dollars for people that are below $100,000 in income. So this would help the workers in the long term, but there's going to be short-term pain, not only in markets, but probably for workers and salaries and inflation and prices going slightly higher in the short term.
For sure. Great breakdown, and kind of gets me wondering, hey, a lot of decisions are being made where, again, workers and the wage earners of the world are on the outside of those decisions. Let's look about us folks on the inside of some of these decisions. And we have a little graph that was put up by Bloomberg this morning, and it was talking about the $5 trillion erased in markets. And as you can see it on your screen right now, company execs rush to buy stocks amid sell-off. And so we are seeing insiders purchasing shares of their own stocks, and always a sign, right, that they believe that this potentially could be a bottom. So that'll be interesting to track. Mahlers has a good breakdown. Recommend his episode. Moving on to Dallas, there was an article in the Dallas Morning News that said Texas doesn't need Bitcoin reserve. And so we have this article. We're going to pull it up right now. And ultimately, the article mentions that Texas doesn't need a Bitcoin reserve. It says, here's a quote for you, Alemo. Texas doesn't need a Bitcoin reserve any more than it needs a Beanie Baby reserve or a tulip bulb fund. Nevertheless, state leaders are determined to create one. It talks about the Senate bill being passed, and what they say for reasons why the Bitcoin reserve has no place in Texas is they mention volatility of Bitcoin and crypto. And this article really loops or lumps crypto and Bitcoin into one pile. So they mention the volatility. They talk about that same dip that Mahlers was talking about recently right now of like 20 to 25%. They mentioned theft and the fact that North Korean affiliated criminals stole 1.5 billion of Ethereum from Bybit. So they mentioned that. They mentioned mining cryptocurrency and demands on electricity. And they say, lastly, majority of Americans don't trust cryptocurrencies, with the PEW Research Center finding that only 17% of Americans have ever used the currencies, a share that hasn't changed since 2021. So they mentioned that as the reasons why Texas should not have a reserve. I'm just going to go through those real quick. Volatility, valid, right? If you're looking at a short-term asset, the Bitcoin does have volatility, and however, strategic reserve seems more of a long-term play. And so if you can weather volatility, again, we always remind folks that when you zoom out, Bitcoin, even right now in its current dip, is still up on the year pretty substantially. So it's not a short-term tool, it's a long-term tool. And then a couple other counters. You want to dive in on that? Because I have a couple other counters. You want to talk about the volatility?
I was just going to add one point. I mean, you don't need Bitcoin, or Bitcoin doesn't need you, but you need Bitcoin. And I think everyone, corporations, governments, people will all come to this understanding on a long enough time horizon. Texas being like, yo, we don't need Bitcoin. It's like, no, you actually do need Bitcoin. It's just on the long enough time horizon, you'll see that.
Yeah, for sure. 100%. Another counter to the volatility, they mentioned the environment side. I'm sure there's tons of miners in Vegas. I mean, in not Vegas, Texas, that are trying to balance the grid and work with energy and be a good energy partner. So there's definitely a counter to that sense of it. And then you have this thing about the government trust. So we're going to pull up something right now That same PEW Research Center had a graph that shows public trust in a government. Well, that shows historic lows. And if you can see the graph 2024, we have a moving average of 22%. So, again, that's not too far off from the same poll that shows trust in Bitcoin and other cryptos as a money. So that's very interesting because the US government is the backing force behind the dollar, and yet the trust in the US government is 22%. So what does that say about trust in the dollar itself or the backing entity of the dollar? Those actually aren't too far off. That was really interesting that I saw there. And then ultimately, this article says that, hey, a government's role is to not lose money more than it is to win off of high risk, and so it has no place in the Texas government structure. To that, I'll just say real quick, and we have an article on Texas and an issue that they're facing right now, and that is uncertainty looms for Texas schools as federal budget cuts risk increasing property taxes and straining public education. Public education funding, teacher pay, and school vouchers become increasingly contentious topics this legislative session in Texas. Texas Senate accelerated the passage of Senate Bill 2, which taps taxpayer dollars for private school tuition. Nonetheless, the public school system, with a 5.5 million student base, clamors for support amid declining enrollment and a slew of other operational challenges. So, some interesting things going on. The dynamic of this Texas doesn't need Bitcoin reserve article. Again, we talked about the trust in Bitcoin. However, they do loop in other cryptocurrencies. And then you have Texas showing other problems with the legacy financial system, right? And so again, it's this concept. There's other financial issues here and strains when evaluating this big picture. So lots of interesting takeaways in Texas there. I don't know, Chris, what do you think? You think they're still going to be first to the strategic reserve? Or do you think this thing will catch steam, those against it, and it'll be basically shot down?
I think as of right now, it looks like it'll be shot down. I mean, I want to add one quick point, though. We always talk about, obviously minimum wage for workers and everyday earners. I know over the last couple of years, in the States, a lot of states have been raising the minimum wage. I know California, New Jersey, New York are all about $15 an hour. I think the federal minimum wage is still $7.20 or $7.25. Obviously, that hasn't changed since the Obama administration. But when we talk about hard money, and this is even like, a weaker hard money, so to speak. But if you used 5 silver quarters and their melt value currently is what used to be the minimum wage pre 1965, or the equivalent of the minimum wage back then to every day, the approximation for pre 1965 Washington quarters is $30.90. Silver spot price per ounce right now is $34. So obviously silver is a lesser metal and is not as hard as gold, or even gold is not as hard as Bitcoin. But that just proves using hard money as a minimum wage would help everyday workers. Obviously, everyone talks about the volatility in the short term, but if you're using a hard money over time, that's like, imagine you were to double every wage earner in America's value that they're getting from their salary or for the hours that they make by doubling it, literally overnight. And let's just say even you're only making $7, you're quadrupling the amount of earning and purchasing power. That would help so many Americans and wage earners all over the world. So that just goes to show, even a weaker hard money such as silver compared to gold and Bitcoin, it just gets supercharged with Bitcoin. So that I'll just leave you there.
Yeah, no, and I know, look, as we see, this whole episode's been talking about this battle to tame inflation, right? And you talked about the current administration and Powell, and inflation remains the main focus. And, numbers, we get numbers in that are closer to 3% than 2%. And people go, well, it's, the average listener might go 1%. Like, what does that mean, right? Well, it means something very powerful. A 2% inflation rate over 3 years is 6%. A 3%, inflation rate is 9%. Those are the most conservative numbers. Now, when you look at salaries, like you mentioned, minimum wage, once again, if you have 9% inflation, you're getting a pay cut unless you get a 9% raise over 3 years at minimum. That's not a raise. That's like a,
break even.
That's break even. So now you need to talk about 10%, 12%, 15, 20% raises. And again, these cities or, public agencies is a perfect example. Doesn't mean they have the revenues to cover that. Just because the cost of money has gone up doesn't mean that their revenues have, automatically gone up. Now, you would think that would offset it some, but there's a lot of other factors there. So yeah, there's issues in the legacy financial system, and some of the critics of Bitcoin, it's always good to talk about, all right, if not Bitcoin, what's the solution to making sure workers and wage earners don't get pay cuts, schools continue to get funded, because it's not like there's no problems without Bitcoin. There's some issues, and we're starting to see them here. One of them, bringing us to the proof of workforce update, is an article we saw out of Chicago that basically was the Chicago City Council telling the school district, if they don't pay, I think it was $174 million to balance the city budget, which resulted in a heavy payment to the pension system, they're gonna cut funding to the schools, which is wild. So there's that showdown going on right now. We just saw the article get pulled up, and it's 175 million to cover a portion of pension payment for some school staff. And Chicago in a dire situation. This is per the report we got. Their 4 city-run pension funds are underfunded with a combined funded ratio of 24%, resulting in a staggering $37.2 billion in unfunded liabilities. Folks, I have to just share how, the perspective of that. Even CalPERS, the largest pension in the United States, I think they only have 168 billion in unfunded liabilities, which is like 25%. That's for the whole state. Chicago is pushing an eye-watering almost 40 billion in unfunded liabilities. So, here we have a system that doesn't involve Bitcoin, and you have this showdown between the schools, and that money is going to be used for a school system that's already severely distressed in Chicago. And they're just chasing this pension that really, per metrics you mention all the time, Alemo, at 24%, that thing's going to need intervention. There's no catching up. There is no catching up to. Yeah. So very dire situation there. And just wanted to give that in the proof of workforce update. Another update real quick, Alemo. Senator Blackburn introduces a pretty wild bill to end federal worker labor unions. I know a lot of Bitcoiners like Senator Blackburn for kind of like mentioning, I think it was at Bitcoin conference, her support for Bitcoin, but a very aggressive stance here towards workers and wage earners. So again, Alemo, checked it out. The picture's coming together. You have money, like Mahler started off the episode. Liquidity's moving from the public sector to the private sector, right? You got, Musk on a tear trying to cut all these programs. Meanwhile, you have a GOP senator that is trying to literally take away federal workers' ability to to unionize and to collectively bargain at the table. So basically, they're trying to, these federal workers won't have some of the tools available in other sectors to kind of defend themselves against these cuts. So this is why we learn about Bitcoin and what's going on. And then before I get your thoughts, last one, Alemo, this was a headline we had to get going. Italian unions worried about job cuts at the U.S. military bases. Elon is not going to be welcome back in Italy. They're cutting. Don't laugh, Alemo. It's not funny, man. I know you're thinking about cooks at the base, and you mentioned bolognese and stuff like that. But these workers basically are getting laid off in Italy because whoever Doge discovered that there needs to be some cuts at the military bases there. I don't know how big the military threat is in Italy or how worried the U.S. is about holding a strong force there. But again, this all comes together, right, in workers and wage earners kind of just being at the mercy of a lot of inside conversations that they're not a part of.
Let's just say Musk's yacht or private jet are not welcome in the country of Italy going forward. That's going to get denied on entry. So, yeah, I mean, it's a bummer. It also, I'll comment on the Marsha Blackburn of it all. It's very interesting that it seems like all these pressures on right now are on workers and federal workers. Like, I'm like the American people that believe like all this wasteful and fraud that we're spending, on transgender hamsters, we could go without that. But, cutting off the knees of workers that are, doing their jobs and working very hard. Not everything was fraud and waste. Obviously, we didn't cut the entire U.S. federal government budget. So I don't understand. I don't know if there was any logic for Marsha Blackburn's reasoning for trying to cut the unions there. I don't know if it was just another cost-saving measure, but I don't even think it would save that much money when you really look at it. So I don't know what her logic is there.
Well, here's the best part about it, Alamo, and this is because the names of the bills always have a little mismatch. But basically, this bill is called the Federal Workforce Freedom Act, and it prohibits federal employees from organizing or joining labor unions in order to collectively bargain, as well as forbid federal agencies from participating in collective bargaining negotiations with labor unions representing federal workers. It's the Federal Workforce Freedom Act. I don't, I get it. It's again, always look past the name of the bill, and it's just interesting right now that would be, that's you see all these orders from Trump that say, right, if you notice the executive order, it says pending all applicable laws. Well, there's strong labor laws in place from the previous administration, and now you can see they are trying to strip those down. And so, people have a lot of thoughts on whether federal employees should be able to participate in labor, et cetera. But I'll tell you, when you're looking at raises not keeping up with inflation, and you're looking at threats to retirement, they got to do something. Our federal workers just, I guess they just have to roll over and take whatever is coming to them. But very interesting development here, and we'll see if that bill moves through the government. Lastly, this takes us to a fan favorite here, Lamo. We've been getting hundreds of letters coming in about the self-custody tip of the week. So here we are with the self-custody tip of the week. Not your keys, not your coins. This is brought to you by La Rocca's Corner, one of San Francisco's oldest neighborhood bars. A great place to grab a drink and lose your Bitcoin potentially. It's in San Francisco. Check it out. Alema knows I don't drink. I don't encourage drinking, but for the layperson, it's a good pastime, I guess. Self custody tip of the week. Learn the difference between custodial and non-custodial mobile Bitcoin wallets. Alemo, for the layperson, what is that? What's the difference between a custodial and non-custodial Bitcoin wallet?
Well, I'm going to first start off and say Bitcoiners and developers are horrible at naming things. So custodial and non-custodial are very confusing when you don't know the context. Custodial wallet, think of it like a bank. You leave your money at a bank. You can get access to your money the majority of the time. But if you talk out against the government, if you do anything wrong, if you do anything illegal, they confiscate all your money. So custodial wallets, there's goods and pros and cons to anything. But custodial wallets are such as Strike Wallet, Aqua Wallet, Wallet of Satoshi. Non-custodial wallets are wallets that you hold in your own control. So meaning that those are wallets like Zeus, Moon Wallet, MUUN, and then Nunchuck Wallet. These are wallets that you have your own keys. And only if someone were able to get into your phone or your computer and were able to crack into it and then be able to move money that way. But a custodial wallet is basically a third party is be able to access and move your money. It's normally easier and more convenient from a usability standpoint, where non-custodial, it's more on you. If there's any issues, you have to work through them. Sometimes those non-custodial wallet companies can help you. If you're having issues, you can reach out to their help desk, such as Zeus does a great team. Evan Kalutis over there, shout out to him. He does great work. But if you lose the money or if you mess up, it's on you, basically. They can try and help you recover it and do certain things, but basically the onerous is on you. But with that comes, great power comes great responsibility. That if you're holding your own keys, it's like if you have your wallet. If you leave your wallet at a bar and it goes missing, it's kind of your fault. but the government wasn't able to confiscate it. You could hide your wallet, you could like put it in the glove box of your car, you could hide it in a safe in your house. But if you misplace it or lose it, you lost the money. Whereas at a bank, if I accidentally send money to Dom and I send him too much and Dom says, hey, I don't want to send it back, you could file a complaint with your bank or with your credit card and they can roll that money back. So I hope that's an easy way to break it down. Custodial wallets, more user-friendly usually, more usability, but you're at the mercy of the institution being able to grant you access to your money. Non-custodial wallets comes with more responsibility. You're able to use it, but if you lose your keys, if you send the Bitcoin to the wrong address, if you do anything like that, there's no easy way to get your money back in less special circumstances. So I hope that's an easy breakdown of non-custodial versus custodial. Like I said, I apologize. So custodial is like a bank, non-custodial is your own risk. I know that's very confusing, but I hope that's a good layman breakdown of the two.
No, that's a good breakdown. For the record, I'm pretty sure Aqua you mentioned. Aqua is a non-custodial in that you hold your own keys. I don't want Samson to come get me here, but Aqua
My bad.
is
Yes, I think you're right.
is a non-custodial. But no, that was a great breakdown. And again, for the listeners at home, Chris mentioned holding your keys. Everyone thinks like I have this much Bitcoin. And so what you hold, remember, Bitcoin is a digital ledger, right? For which the records are maintained by computers all over the world. Let's just do that simple breakdown and not get into the weeds on that. So what do you hold? You hold a claim to a piece of that ledger, proving that you own part of that ledger, which is called a Bitcoin. And it's maintained by the Bitcoin network. So when you hold these keys, you have a few options, adding to what Alemo is saying. You have the option to trust another third-party provider. Let's just say Alemo started an app called, Bitcoin Wallet Plus, and you say, I don't want to hold my key. Alemo, you create software to store that key somewhere. All I do is interact with the wallet and I send something with a password, et cetera, et cetera. But you as the app have that key, so I don't have to deal with it. That is a custodial wallet. What is a non-custodial wallet? It's where the app doesn't or shouldn't. That's on the Bitcoin community to check the source of the app and the code, and that's called open source, is when it's viewable. But the app doesn't store your keys, and you have to store your keys yourself. What are those keys? That's your claim to the Bitcoin ledger, showing that, like, if I wanted to send Alemo 1 Bitcoin or something, that I can prove that I have 1 Bitcoin on this ledger. And so when you have a non-custodial wallet, it's on you to hold those keys. What does that mean? It means the app they can't take that claim from you and then go claim it. It can't be confiscated. You're the only one with the keys to that claim. So knowing the difference is your tip of the week, and then figuring out when you would use them and in what scenario. If you go to a place and you valet and you like to tip the valet in Bitcoin, and you don't like to, you like a quick, easy wallet with a bunch of bells and whistles where you just pull out your phone, QR, zap real quick, and you're gone. Maybe you want to use a custodial wallet because you like the way it works, et cetera, and it's easier and more people have it. And you don't keep much money on there, $20. And is the app going to steal your Bitcoin? They shouldn't, but if they did, you'd be talking about like $20 that you keep on there to tip the valet. If you have something more substantial, then you may want to definitely look into your own, custody and a non-custodial wallet. So I know it sounds complex, but again, this is one of the breakthroughs of Bitcoin, the fact that you can interact with a digital ledger worldwide with having only a claim to that. Think of it like, here's one I mentioned the other day, Alemo, like you're holding the key to a safety deposit box from a bank that you travel with around the world. The only difference is that safety deposit box is available to you 24/7 from anywhere in the world to be sent digitally. Imagine if you could do that. Imagine if Alemo could have a safety deposit box with something in there, but instead of having to go to, some city in the US where a safety deposit box is, it's accessible anywhere in the world at any time, as long as he has access to the internet and 12 to 24 words proving that the key is his own. That is the power of Bitcoin, and that's something that you should learn. So in your self-custody tip of the week, learn the difference between custodial and non-custodial mobile wallets as a way to better learn what Bitcoin offers as a tool. So I'll bring us home there, Alema. We've exceeded the average work break of the worker wage earner. We want to respect the worker wage earner. That's our folks. That's why we're here. So thanks for tuning in to Proof of Workforce Live. I'm Don Bay with Chris Alemo, and we are clocking out for the day. Stay humble, stack sats, and if you're going to trade your time for money, whatever you do, make sure you find a way to make sure that that money holds up over time. You work hard, you trade a lot of time and energy, so find a way to maintain that value. Always do your own research. Don't trust, verify for yourself. Thanks, y'all. We'll see you soon.